Very good morning, my dear friends. I think so. This is the last session with respect to the chapter liquidation of companies as well as entire my slot. Fine. Sir, in the last session related to liquidation of companies, we completed problems based on section 326 as well as section 327. Then we also seen part of the problems related to liquidator final statement. I mean, we are not seeing direct problem on liquidator final statement. So regarding a settlement to various parties of the liquidator final statements, we will see how to calculate the liquidator remuneration, how to distribute cash among the equity shareholders when different paid up values they have and the face value is same. And today we are dealing with exclusive problems related to liquidator final statement as well as list B contributories, which is pretty much small concept. And also we will end up this chapter with statement of affairs. So before proceeding that, some of the persons, that is, I think so only one person, not some of the persons as well. One person asked, sir, how they will ask the questions in the examination related to section 326. We already given, na? We are not there while discussing questions with respect to section 326. Problem number 2 is related to section 326 only. Problem number 2, what we done in the classroom in the last class is related to section 326. In the same model only they are going to ask. Okay. Problem number 3 is related to section 327. 326 is related to overriding preferential payments. 327 is related to preferential creditors. Both the type of problems we covered. Problem number 4 is related to list B contributories. We not yet touched. Problem number 5 is related to liquidator remuneration, as I discussed, which is form part of liquidator final statement. Problem number 6 is related to distribution of surplus among the equity shareholders. Distribution of surplus among equity shareholders when the face values are equal, but there is a difference in paid up values. Am I right? There are actually two methods are possible. One method is distribution of deficit, and another method is notional call method. According to your choice, you can select the appropriate method. That is altogether problem number 6. I think so in the last class we completed up to this portion. We also completed problem number 1, which is respective to order of making payment by the liquidator. Order of making payment by the liquidator. That is related to problem number 1. Am I right, guys? I don't want to give any recap because most of the things till now what we discussed are related to theoretical issues only. The important issues what we were discussed are what we were discussed, things related to I mean different list present in statement of affairs. List A, assets not specifically pledged. List B, assets specifically pledged as well as secured creditors with fixed charge. Then list C, preferential creditors. List D, secured creditors with floating charge. And list E, unsecured creditors. List F, preference shareholders. List G, equity shareholders. That is with respect to different lists under statement of affairs. And one more thing, statement of affairs is prepared by whom, sir? Statement of affairs is prepared by board of directors. Am I right or wrong, guys? Statement of affairs is ultimately prepared by whom, sir? It was prepared by board of directors and ultimately hand out to NCLT. Then NCLT will hand out to liquidator. And one more thing, the statement of affairs contains only the estimates but not the actual figures. Statement affairs provide the information to the liquidator with respect to all estimated realizable value of assets as well as all estimated value of liabilities need to be discharged. And this statement of affairs is going to be prepared by board of directors. Ultimately, in equity shareholders point of view, whether they are getting surplus or deficit, except that nothing was discussed related to statement of affairs. Then we discussed various issues related to liquidator final statement. Liquidator final statement is a simple receipts and payments account, where how the format will look like, sir. It will be start with assets not specifically pledged, that is we may start with ANSP, then asset specifically pledged. Out of the realization from asset specifically pledged, any secured creditor with fixed charge is available. You can reduce the surplus only, you can carry it forward to the last column, which is the surplus. Then you can start making payment to various parties, start with legal charges, then liquidator remuneration, then liquidation expenses, then preferential creditors. After that, you should need to pay secured creditors with floating charge. But for presentation, first you need to present the floating charge, after that preferential creditors, then unsecured creditors, then preference shareholders, then equity shareholders. Sir, in this order of payment, at any point of time, if liquidator is not having the sufficient cash on his hand, then if in the company partly paid up equity shares are there, then he can make a call from such partly paid up equity shareholders, which is nothing but call money. Sir, various implications also we seen under this liquidator final statement. So liquidator remuneration, we may calculate on percentage of assets realized, or we may calculate on percentage of payments made to various parties. If it is based on percentage of assets realized, you can straight away apply the percentage. And in case of percentage of payment made to the liability holders, if the cash available with the liquidator is sufficient to repay the liability as well as liquidator remuneration, you can directly apply the percentage. If the cash available is insufficient to make payment to that particular party as well as liquidator remuneration, then you should need to apply cash availability into R percentage divided by 100 plus R percentage. We've seen such type of questions also. Then, sir, secured creditors with floating charge in generally covered by the debenture holders. Sir, claims related to debenture holders means along with the debenture capital, we should need also make payment also related to debenture interest. So related to debenture interest up to the date of liquidation, company should need to pay, or liquidator should need to pay, whether the company is solvent or not. Irrespective of such fact, the company should need to pay. But debenture interest from the date of liquidation up to the date of settlement, date of liquidation to up to the date of settlement. If the company is solvent, then only you need to pay. Sir, if the company is not solvent, sir, or insolvent, sir, no need to pay. When you know whether the company is solvent or not, if the liquidator can able to repay all their outside debts, still the liquidator will have a surplus cash, then we can say to be company is solvent. Otherwise, the company is insolvent. That's it. So what I'm trying to tell here, up to the date of liquidation, you can settle the both the debenture capital as well as debenture interest. But from the date of liquidation to the up to the date of settlement, debenture interest, you can only need to pay when the company become solvent. That's it. Next, one more important aspects I discussed, right, which is related to arrears of preference dividend. Sir, when arrears of preference dividend we need to pay, if there is a provision in the articles of association with respect to payment of such arrears of preference dividend, then you can pay such arrears of preference dividend before making payment to the preference share capital. Okay, so that point also I clearly mentioned. Then certain important issues like section 326 as well as section 327 we discussed in the classroom in the last class. Section 327 is related to preferential creditors. Sir, who are all coming under this preferential creditors category, sir? Generally, the last 12 months, payments related to the government with respect to taxes, duties, cess, etc. in the form of direct taxes or indirect taxes with whatever the name may be. Next, employees' salaries related to the preceding 12 months. any of the 4 months salary, you can treat it as a preferential creditor, but it should not exceed 20,000 per employee. We check that one as well. Next, sir, employees holiday remuneration is also form part of preferential creditor. Sir, certain statutory obligations of employers like PF, gratuity, ESI, all such things are also form part of preferential creditors. We also seen death or disablement compensation is also form part of preferential creditors. Investigation expenses is also form part of preferential creditors as per section 327. Sir, preferential creditors have a preferential right at the time of receiving payment from the liquidator while comparing with the secured creditors with floating charge. Am I right? And one more exception is also there, section 326. That's why it was clearly given in section 327 that except in section 326 situations, because section 326 is related to OPP, overriding preferential payments. Overriding preferential payments. Okay, sir, what exactly overriding preferential payments is all about, sir? Overriding preferential payments is nothing but balance of workman compensation. Which balance of workman compensation? As per the privilege given to the workman compensation as per the Companies Act 2013, whenever the liquidator is realizing cash from any particular asset which was asset specifically pledged, then out of such realization, they should need to consider equally workman as well as secured creditor with fixed charge. After discharging the realization from asset specifically pledged, if any balance of workman compensation is there, such balance of workman compensation is a overriding preferential payment. Number 2, sir, amount foregone by the secured creditor with fixed charge due to making pari passu payment with workman compensation. How much actually they foregone? That foregone amount by secured creditor with fixed charge due to pari passu payment with workman compensation is also you can consider as overriding preferential payments. So regarding both 327 and 326 also we done certain questions. And one more important aspects we discussed in the theory, what it is, distribution of surplus cash among the equity shareholders. These equity shareholders are different class of equity shareholders, different class. Actually, we done in 2 different methods. So what are such different methods, guys? Let me know. Method number 1 is distribution of deficit method. And another method was notional call method. Do you agree? So last problem in the last class, we done only under this method, distribution of deficit method. In this method, what we will do in generally, we will consider the total face value of all the class of shareholders. It will be compared with the cash availability, actually the total cash availability. Then the difference itself is nothing but deficit. Such deficit you should need to distribute among the various equity shareholder. So after distribution, you should need to check the final balance. If it have the positive, then we should need to distribute amount of cash to such class of shareholder. If it is negative, then they should need to bring cash or they should need to introduce cash into the company. So that is the level of discussion we made with respect to distribution of deficit method. Sir, what about notional call method, sir? Under notional call method, just liquidator assume that the entire unpaid value should need to cancel. First, we will start with cash availability, then notional call, then we will know total cash availability after making the notional call. Am I right? Now, once you made the notional call, then all the existing class of equity shareholders will have equal face value and equal paid up value. Then you can distribute this amount of cash equally among all the equity shareholders. Then finally, you need to check whether a particular class of shareholders should need to bring the cash into the company or the company should need to make payment to such particular class of equity shareholders. How we know? Notional call means cash need to introduce. Here at the time of distribution means cash given by company to the equity shareholders. The net difference we can need to check whether they need to introduce, whether the company should need to pay. Am I right, guys? Next, sir, one more important issue just I want to discuss, then I'll go with the problem, guys. What is that? Still, I'm in the concept of distribution of surplus among the equity shareholders. But right now, the different class of equity shareholders means not only change in paid up value, there is also change in face value. Change in face value and also change in paid up value. Then how we can distribute cash or surplus? How the liquidator will distribute surplus among the various class of equity shareholders, we are going to discuss with a problem. That problem is problem number 7, guys. All of you, please come to problem number 7 quickly. Can I proceed, guys? Before proceeding with the problem, one of the doubt by Hiral. So doubt regarding amalgamation, sum number 9. Why amalgamation adjustment reserves are deducted from reserves and surplus in forming balance sheet of X Limited? Hey Hiral, are you there in the class at the time of discussing the amalgamation? I clearly told you the adjustment entry for amalgamation was if amalgamation adjustment account at R2 reserves and surplus. Amalgamation adjustment account should be shown under reserves and surplus as a negative figure only as per the guidance given in Schedule 3 of Companies Act 2013. Amalgamation adjustment reserve should be shown as a negative figure as like the P&L debit balance. That is the reason why we are reducing from reserves and surplus. Okay. Sir, so many times they are asking, sir, handwritten notes and something was not uploaded. Dear friends, please all of you listen my words here seriously. I almost uploaded 5 to 6 times. Whenever you are reminding, I'm uploading after completion of the class. That is not my mistake. So as I told you, I think so certain technical issues, maybe they are from the ICA people side. That is, there are maybe certain issues in the Boss Knowledge portal. I know today is the last session. Anyway, I need to interact with one of the technical person. I think so. He is Mr. Vivek. Today, I will update with Mr. Vivek as well. Okay. So once I'll get the update from the Vivek, then you can able to visible all my materials. As I promise you, once the class got over, I'll upload my entire materials for the other chapters as well. Even though I not thought the other chapters, still I'll upload my material related to other chapters for your reference. No worries. Okay. No, don't use my method names, Sriram. That is only for remembering purpose. Distribution of deficit, national call, those such type of methods were not at all represented in the Companies Act 2013. Don't use such words. That is only for remembering purpose. Okay. So we can't go in the any other simple mode, right? So that's why just let us give one name from my point of view. That's it, nothing else. Okay. What else? Any other doubts? Then quickly let me check. Then we'll jump into problem number 7. Fine. Please concentrate with respect to problem number 7, guys. Wind Limited went into liquidation on 31st March 2011. Following are the details regarding share capital of the money. 15,000 equity shares, 100 rupees each, 90 rupees paid up. 40,000 equity shares, 50 rupees each, 25 rupees paid up. 2 lakh equity shares, 10 rupees each, fully paid up, which is fully paid up. Surplus available with the liquidator after payment of all the liabilities is 12 lakhs. Distribute the surplus of money among different categories of shareholders. If you observe how this problem different from problem number 6, you know, in problem number 6, face value is same, paid up value is different. In problem number 7, face value is different and paid up value also different. That is the difference between 6 and 7. And if I'm not wrong, I think so. In the last examination or last 2 before examination, they asked one question related to distribution of cash among the various parties. Okay, fine. Here, if we convert 7 into the 6, then we can simply resolve the problem number 7 as well. Sir, what you are talking, sir? If you are convert 7 into 6 means, if you can able to convert the face values are equal, then the problem automatically will look like problem number 6. Do you agree, all of you? Now, to convert all the face values with the same figures, what we should need to do, we should need to apply the equivalent units concept. You might listen this concept under costing, if I'm not wrong. I think so. In which chapter you may aware about this? What is that? Process costing. Yes, in process costing, you may apply the concept of equivalent units, but this is not a rocket science here. We can simply apply, sir, if the face value is 50 rupees, if I want to convert 50 rupees face value into 100 means what I should need to do? I should need to decrease the number of equity shares by 2. It should be here multiply by 2, multiply 2, then it will become 100. That's why by 2, then it will become 20,000 equity shares. Sir, face value 10 rupees. If I need to convert into 100 rupees face value, here I should need to multiply with 10. That's why here division with 10. Here it will become, again 20,000. Yes, here also 20,000 equity shares. That means now you can tell in this way, 15,000 equity shares of 100 each, 20,000 equity shares of 100 each, 20,000 equity shares of 100 each. Now, if you can observe, the problem will look like problem number 6. Now, let me apply the same issue here. First, please, all of you concentrate. Let me start with problem number 7 answer. So, total 3 class of equity shareholders are there. Class 1, class 2, class 3. This is all about particulars. This is total. Now, can you please tell me, all of you, first, number of equity shares. Number of equity shares, class 1, 15,000. 15,000, class 1 face value was 100 actually. And class 2, 40,000 equity shares, face value was 50. Class 3 equity shareholders were 2 lakhs and face value was 10. This is all about number of equity shares. I don't want to put total here. Just please be hold for some time. Then equivalent number of equity shares. Here 15,000. Here divided by 2, 20,000. Here divided by 10, 20,000. Am I right? All of you. Total face value or simply face value of equity shares. So can you please tell me now 15,000 into 100 how much, which is 15 lakhs. Here 20,000 into 100 now you should need to multiply which is 20 lakhs. Here also 20 lakhs. So total face value how much? 55 lakhs. Now as like in the old problem only, paid up value. You can start work out the paid up value, which is 15,000 into 90. How much? Which is 13,50,000. Next for class 2, which is 40,000 into 25 or 20,000 into 50, as your wish. Both are same. 10 lakhs, that was. Next for class 3, which is 2 lakhs and fully paid up, they are given. That's why 20 lakhs. So total paid up value 30 plus 13,50,000, 43,50,000. May I know deficit is how much? 11,50,000 is the deficit. So deficit of rupees 11,50,000 should need to distribute in the face value ratio, which is 15 is to 20 is to 20, 3 is to 4 is to 4. Now may I know 11,50,000 multiplied with 3 by 11, which is 3,13,636 here. 11,50,000 4 by 11, 4,18,182, 4,18,182. Now, if you reduce 13,50,000 minus 3,13,636. 10 lakh. 1 second, guys. 1 second, all of you. Deficit is not 11,50,000. I am so sorry. I'm so sorry, guys. Deficit, how we need to calculate? Surplus of cash available, how much was given? 12 lakhs, na? Now, such 12 lakhs you need to compare with. Tell me, guys. Such 12 lakh we need to compare with this paid up value, 43,50,000. The difference is the deficit. I'm so sorry. 43,50,000 minus the surplus of cash available was 12 lakhs minus 12 lakhs. So the difference is 31,50,000. Everything is correct only, no worries. On behalf of 11,50,000, just put it 31,50,000. Now you can distribute 31,50,000 multiplied with 3 by 11, which is 8,59,091 here. Here 11,45,455. Here also the same figure, 11,45,455. Am I right, guys? So the total deficit was 31,50,000. Now you can check the difference. 13,50,000 minus 8,59,091. 4,90,909 positive figure. Here 1,45,455 negative figure. Here 20 lakhs minus 11,45,455. 8,54,545. What is the meaning of this, sir? What is the meaning of this? Class 2 shareholders should need to bring the cash to the extent of 1,45,455. Then the liquidator can able to repay class 1 to the extent of 4,99,909, and for class 3 8,54,545. Am I right? If you are asking, sir, per share how much class 2 shareholders should need to contribute, sir, per share, I'm asking you per share how much they should need to contribute, sir. If you ask per share, you should not divide it with 20,000, you should divide it with 40,000, because the actual number of equity shares are 40,000. Per share how much, sir? 1,45,455 divided by 40,000. Then per share how much they should need to introduce into the cash, easily understand by the liquidator. Then for class 1 and class 3, how much we should need to make payments, sir? Divided with 15,000 here divided with 2 lakhs here. Then per share how much we can able to pay to such particular class of equity shareholders also we can easily understand. That's it, guys. This is all about problem number 7. You can cross check the solution with the my printed material. Just a second. So just for computation issues, which is 4,90,910 and 145,455. Yes, 854,545. Same thing. Hope you understand. Only one thing here I want to highlight, that is whenever there is change in face value as well as change in paid up value exist, then along with the distribution of deficit, you should also put in your mind that you should apply the equivalent number of units concept. Am I right, guys? Fine. Now, just I want to provide one single chart for your conclusion. Please consider it. What is the chart is all about? Please consider it, guys. This chart is related to distribution of cash. Distribution of cash or surplus. Distribution of surplus among various class of equity shareholders. Two methods are possible. Method number 1, deficit distribution method. As I told you already, such type of methods are not exist in the material, just for understanding purpose. Deficit distribution of the names, they are not given, but I put certain names. That's it. Deficit distribution methods and notional call method. Any method you can use. Notional call method. Sir, again, here, in case of deficit distribution method, maybe two possibilities are there. Face value, same. Paid up value, different. Here, face value, different, as well as paid up value also. Now, if face value same and a paid up value different, then you can directly go for deficit distribution. Directly deficit distribution. Face value different and paid up value different. First, apply the equivalent units concept. Then you can apply the deficit distribution method. Sir, here also, if you want to apply the other method under notional call method, here also the two choices are there. One is face value and another one is paid up value. All the face value for different classes are same and paid up value different. Then what you can directly do, go for the notional call. Notional call for entire unpaid value. Am I right? Then you can know how to distribute, how to check such all issues. Sir, if the face value is different and paid up value also different, then before applying the notional call, first you should need to apply the concept of again equivalent units, guys. Then you can go for the notional call. That's it, guys. So many persons are confusing with respect to distribution of surplus of cash among the equity shareholders while presenting the liquidator final statement. That part also I clearly given through this chart. Is it okay, guys? Fine. Next, this is all about problem number 7 and distribution of surplus cash among the various equity shareholders. Now, this is the time to deal with liquidator final statement problems. All of you, please concentrate. Regarding problem number 8, which is related to liquidator's final statement of account. So there is a high probability to ask this type of questions in the examination. Please concentrate. So today also I will go for early break. Once I will finish problem number 8, I'll go for the break. Okay. Then after that, I'll continue my flow. Omega Limited resolved on 31st March 2011 that the company be wound up voluntarily, which is a voluntary liquidation. The following was the trial balance extracted from its books as on the date. PPE was given, inventory, book debts, cash in hand, P&L account, debit balance. That is the reason why they are showing as a debit side and a asset side, which is having a debit balance. Preference share capital, equity share capital. Two different classes are available. If you observe here, one class, face value 100 is fully paid up. Another class, face value 100 is 75 paid up. Loan from bank on security of the stock. Whenever you see like this, loan, that is security of the stock. Stock you can treat it as ASP, asset specifically pledged. And the loan from bank is a secured creditor with fixed charge. With fixed charge. That is the information they are indirectly conveying to you. Because at the time of availing the bank loan, your company offered stock as a security. Next, trade payables information was also given. The assets realized the following amounts after all cost of realization and liquidator's commission amounting to 5,000. They are given that liquidator's commission, liquidator remuneration directly given that which was 5,000, no need to apply any percentage, which was paid out of cash in hand. Okay. Here cash in hand is there, na 3 lakh, which was paid out of such cash in hand. Property, plant and equipment was given at 1,68,000. Inventory was given at 1,10,000. Trade receivables given at 2,30,000. Okay. What is this? These are the realizable values or real realization values by the liquidator. Calls on partly paid shares were made, but the amounts due on 200 shares were found to be irrecoverable. That means here total 2,000 partly paid up equity shares are there. Liquidator made a call on entire 2,000 equity shares, but out of which 200 shares were found to be irrecoverable, means only liquidator is able to recover call money from 1800 equity shareholders only. You are required to prepare liquidator final statement of account. Now, all of you please come to my OneNote, which is problem number 8, related to liquidator final statement. What is the format, guys? So which is a simple receipts and payments account. Yeah, fine. Concentrate, all of you. Start with the receipts under left hand side. Amount rupees. Payments. Amount rupees. Am I right? Now, under the receipts, first you can start with ANSP. ANSP means those assets which are not specifically pledged. Property, plant and equipment not offered as a security, but inventory was offered as a security at the time of availing the loan. Trade receivables not offered as a security. And we are also having one more asset which was cash in hand. So total 4 assets are there. Out of this, inventory is only ASP. Here this is ANSP. Book debts also ANSP. Cash in hand is also ANSP. So that's why you can directly start with cash in hand first here. Cash in hand given how much? 40,000. Next, PPE, property, plant and equipment, which was realized by the liquidator. How much? 1,68,000. If you want, you can put the heading also as ANSP. Okay. Then after PPE, book debts also there. Book debts realized at which value? Trade receivables 2,30,000. Next, ASP, assets specifically pledged. Inventory is there. Inventory is realized at 1,10,000 inner. Less. So after realization of inventory, you should need to make payment to loan from bank. Na? Loan from bank how much? 1 lakh. Less loan from bank, which is secured creditor with fixed charge, which is at 1 lakh. So 10,000 is the surplus. So surplus of 10,000 only you can carry forward to the final amount column. Am I right, guys? Next, don't go for call at this moment. You can wait. If cash is insufficient to repayment to a particular party, then only liquidator will go for a call money. That's why I will wait till that date. Then you can go for payments. Under payments, there are no legal charges, but liquidator remuneration was clearly provided in the problem, which was 5,000. You can write liquidator commission or liquidator remuneration as your wish, which was given at how much, guys? 5,000. Follow the order. After liquidator remuneration, liquidation expenses, nowhere given. After that, you should make payment to preferential creditors. Actually, any taxes, duties, cess, employees remuneration. Tell me, guys, compensation, death or disablement compensation, nothing is there. I think so. There is no information related to preferential creditors. You can go for secured creditors with floating charge, guys. Secured creditors with floating charge is available or not available? Under liabilities, secured creditors with floating charge is also not available. There is nowhere given information related to debenture holders. That's why you can jump to unsecured creditors. So unsecured creditors, trade payable is an unsecured creditor. Apart from that, any other unsecured creditor is available? No. That's why you can go for payment for trade payables, guys. Trade payables, how much? Is there anywhere provided how much they are providing? If nothing is given means we can directly take in the book value, which was 3,50,000. Now, all of you please check how much cash is available with the liquidator. First, under receipt side, 40,000 plus 1,68,000 plus 2,30,000 plus 10,000 minus 5,000 I paid for liquidator commission minus trade payables I paid 3,50,000. Still I have 93,000 cash balance. After making payment to trade payables, I have 93,000 cash balance. Am I right or wrong? All of you with me? Now, my question is, there is no other liability exist. Now I should need to make payment to preference shareholders in the order. But the cash available was only 93,000. But I need to repay 1 lakh. Is that cash is sufficient with the liquidator? No. If the cash is not sufficient with the liquidator, he can go for call. Now all of you please concentrate here. Go for working note. Working note number 1. Computation of call money need to made from partly paid up equity shareholders. From partly paid up equity shareholders. That is the working note. First, cash available with a liquidator before making payment to preference shareholders. How much? Just now we worked out. How much, guys? 93,000 is there. Now the same 93,000 you can consider here. Don't go for direct payment to preference shareholders because the cash is insufficient. Then apply the, just I am doing this problem by applying the second method, distribution of surplus among various equity shareholders. Apply the notional call. Method number 2, notional call. Add the notional call from equity shareholders. Sir, notional call, I called for entire 2,000 equity shareholders, but it is clearly given that only 1,800 equity shares only they paid because remaining 200 shares are unable to recover. That's why to the extent of 1,800 equity shares only you can make a notional call as well. So 1,800 into 25 rupees. How much? 1,800 into 25 means 45,000. Then the cash available with the liquidator will become 1,38,000. If you are distributing this 1,38,000 among the preference shareholders, you can distribute entire amount of 1 lakh. Then remaining surplus will be 38,000. Surplus available to equity shareholders. Now, please all of you concentrate here. Once I made the notional call, these entire 2,000 equity shares are anyway 100 fully paid up. Out of this 2,000, 1,800 equity shares are fully paid up. Sir, I will leave about the remaining 200 equity shareholders. Do you know why? Because whenever I am asking the money, they are unable to contribute. That's why I am not providing the surplus as well to them. I am not considering such 200 equity shares on a notional call. I am not considering such 200 equity shares while distributing the surplus as well. That's why the total number of equity shares available to distribute the surplus amount was 2,000 plus 1,800, 3,800. Therefore, surplus per equity share is equal to 38,000 divided by 3,800 equity shares. How I will get 3,800? Here 2,000 plus out of this 2,000, 1,800. Total 3,800. That equal to 10 rupees per share. Now all of you please concentrate. I have two different class of equity shareholders. Class 1, class 2. Class 1 face value, that is paid up value 100. Class 2 paid up value was 75. These are the two different class. Now what I told, notional call. Class 1 0. I am only asking notional call from class 2 only. So class 2 notional call I made 25 rupees. Now I am giving surplus per share for class 1 giving 10 rupees per share. For class 2 also I am giving 10 rupees per share because in this 3,800 it is inclusive of both class 1 and class 2. Now ultimately for class 1 shareholders the company should need to pay 10 rupees per share. For class 2 they should need to contribute 25. Then the company or the liquidator will pay 10 rupees. That's why the net amount of 15 rupees they should need to contribute. So negative means they should need to contribute. Positive means we are giving the surplus. Now all of you please concentrate. First, we will ask 15 rupees from the partly paid up equity shareholders. Call money from 1800 equity shareholders. 1800 into 15 rupees. How much? 1800 into 15, which is equal to 27,000. Please consider, guys. Once these equity shareholders contribute 27,000, then the cash available, real cash available with the liquidator, 93,000 plus 27,000. How much it is? 93 plus 27,000, 1,20,000. Then he can able to make payment to preference shareholders for 1 lakh. Still with the liquidator, 20,000 cash is available. Such 20,000 cash he can distribute among the other class of equity shareholders. The other class of equity shareholders were 2,000 equity shares multiplied with each and every equity share we are giving how much surplus. I clearly told you here how much surplus I am providing. 10 rupees. 2,000 into 10, 20,000. Now with the liquidator, no cash available. This is the liquidator final statement. One more time repeating the last step, guys. First, this entire working note, why we are making, how much real call we need to make from the equity shareholders. First, I start with the cash availability. Then just I made the notional call. This is not the real call. Then if you make the 25 rupees per share as a notional call, after making preference shareholders, still you are having a surplus of cash of 38,000 to distribute among the equity shareholders. If that is the case, each and every equity shareholder will get 10 rupees per share. But no need to ask 25 rupees and no need to distribute 10 rupees per share for each and every equity shareholder. That's why I will checking the net effect. For class 1, the net effect is you should need to distribute 10 rupees per share. Class 2 shareholder, they should need to contribute 15 rupees per share. This is the net impact I found through this working note. Now, from this working note, it is clearly given that class 2 shareholder should need to contribute 15 rupees per share. That's why I made a call money from 1800 equity shares at the rate of 15. Now I need to check the real cash available after making this call. Before making this call, cash with the liquidator 93,000. After making this call, class with the liquidator was, just a second. Yeah. After this call, cash available with the liquidator was 27,000 plus 27,000 plus availability 93,000. So 27 plus 93 means 1,20,000. Out of this 1,20,000, you can able to make payment to preference shareholders for 1 lakh. And the remaining 20,000 you can distribute among the 2,000 equity shareholders at the rate of 10 rupees. Then automatically discharging all the parties is over. Hope you understand, guys. Regarding problem number 8. Unless otherwise specifically given, always the charge is fixed charge. Karthik Gupta, the same point I actually told in previous classes. If nothing was specified, we can simply assume that the charge was fixed charge only. If something they are clearly mentioned, which is a floating charge, then only you can assume it as a floating charge. Okay. Hope you understand. Hey, Pooja, you are asking that, sir, why you are using equivalent units method like that, sir? What I told, don't use the method names in the exams, just for remembering purpose. Unless otherwise, if something will not be in your mind, at that point of time, how that point will strike in your mind. Just for remembering, but okay, I should need to apply the equivalent number of units method. Just for apply, just in your mind, put that point. Okay. Sir, if calls in arrears and call received in advance were also given in problem number 7, then how it will be treated? You're asking in problem number 7 means here, calls in arrears and calls in advance. My dear, calls in arrears and calls in advance will not be taken into consideration in this computation, because calls in arrear means That call money was not at all recoverable, right? We are unable to recoverable. That's why we are ignoring this. Actually, what question you asked was covered through problem number 8. If you observe here, calls and arrears are there na. What we are doing, we are excluding such shares at all. Whenever calls and arrears are there, you can exclude such shares from the shareholders list. Then you can apply the concept. Do you understand? If calls in advance is there, calls in advance we are treating as a liability, guys, not the shareholders funds. Do you understand? That is, before making payment to that particular party, you should need make payment for the calls in advance. Calls in advance is not a shareholders contribution, which is a liability to the organization. So that's why calls in advance concept not at all inculcated into this concept. If calls in arrears are there, such shares you can straight away reduce, then you can apply this concept. Okay. Fine. Sir, repeat security of stock point. Nothing is there, Nama, related to security of stock point. We took a loan from the bank for 1 lakh by offering the security, which is a inventory. Now the inventory realizable value was 1,10,000, but the loan against that inventory security is 1 lakh. That's why while realizing the inventory 1,10,000, first you should need make payment for that loan. That's why here first you should make payment for that 1 lakh loan. The remaining surplus of cash only available for making distribution to various parties. Is it okay, guys? Fine. Guys, all of you please go for the break and exactly assemble by 8 to. Then I don't want to continue. I don't want to break my flow from there itself. I'll continue till the end. Okay, please all of you took the break. Please all of you go for the break. Sorry. Guys, some persons asking certain doubts regarding the distribution actually. Sir, please put your mic under mute mode. Certain disturbances are coming, please. Sir, what about calls in arrears and calls in advance? If at all such issues are there under liquidator final statement or at the time of making final settlement to the various parties, if such things are there, what we should need to do? One thing, guys, if calls in arrears are there, then actually a separate concept I need to discuss. For that purpose only, list A contributories and a list B contributory concept is there actually. So you should need to wait for some more time what exactly accounting treatment we should need to make for calls in arrears. But till the time of discussion, whenever calls in arrears are there, if something was not clearly specified, then you can simply ignore such calls in arrears at the time of making or at the time of asking call money from such shareholders and at the time of distribution of surplus cash among such shareholders as well. As you seen in the last problem, if you observe in the problem, it is clearly given that where here, just a moment. So it was clearly given in the problem 200 shares were found to be irrecoverable. That means which are calls in arrears only. What I did, such 200 shares were ignored at the time of asking call money. If you clearly observe in my OneNote, I only made notional call for 1800 equity shares. Not only that, at the time of distribution of surplus cash also I ignored. That is the point I'm mentioning. Whether you are following method number 1 or method number 2. In case of deficit distribution method also you can do that. This is all about deficit distribution method. In such deficit distribution method, don't consider such equity shares at all. Under the face value, don't consider. Under the paid up value also don't consider. Do you agree what I'm telling? So in the same way, you can ignore that, then you can complete the problem. But if list B contributor is coming into the picture, then the treatment for calls in arrears are altogether different. Because till now, I'm not differentiating that, sir, certain contributories are list A contributories, certain contributories are list B contributories. I'm not differentiating all such things. That's why, unless otherwise it is clearly specified that list A contributories and list B contributories, you can apply the same accounting treatment. In this problem, if you check, there is no information with respect to list A and list B contributories. That's why the calls in arrears were simply ignored or eliminated, both at the time of making call money from the equity shareholders, at the time of making distribution among the equity shareholders as well. Hope you understand. Okay. Next, some more doubts are actually asking our friends. Please let me quickly resolve such doubts and then we'll jump into the next problem. Sir, in the question, it's given as workman holiday due to other workman dues, income tax refund, secured creditor with the floating charge. What would be the preference sequence? Just a second. So this question is asked by Vivek Kumar actually. Sir, workman holiday due to other workman dues, which is no doubt about it overriding preferential payment. So that's why first we should make payment to that workman. Then income tax refund means, which is a preferential creditor. Then you should make payment to the income tax, which is a refund. Refund means which is not a payment here. Refund means it is receivable from the department. Okay. Then at that point of time, which you can treat it as an asset. If it is income tax payable, then only it is preferential creditor. Secured creditor with fixed charge. One thing you need to understand, if secured creditor with fixed charge is available, then first you need to compare the secured creditor with fixed charge as well as the workman compensation, as I told you. So realization from a specific asset, first you should need to distribute among the workman and secured creditor with fixed charge. After that only the remaining workman use and the secured creditor with fixed charge unable to make payment. To that extent only you can treat it as an overriding preferential payment. That point you should need to remember. Then floating charge, then preference, then equity, you know. So my question is, here my answer is, the question first I will let me put here. What his question is, sir, for example, in the problem, workman compensation is there, income tax is there, secured creditor with fixed charge is there, secured creditor with floating charge is there. Then what is the sequence? First, what you should need to do, so took workman compensation and secured creditors with fixed charge first. Whenever you are realizing an asset which was specifically pledged, first distribute among the workman compensation and secured creditors with fixed charge. And the remaining workman outstanding, or the balance workman compensation, and to the extent of the secured creditors with fixed charge foregone due to making pari passu payment with the workman, that portion of secured creditor with fixed charge you can treat as overriding preferential payment as per section 326. After that, you can make payment for the income tax. After that, you can go for the secured creditor with floating charge, then unsecured creditors, then preference shareholders, then equity shareholders. Okay. Sir, in exam, if not mentioned deficit distribution or notional call method, then which method we need to adopt? My dear Vivek, I already told you such type of method names for not at all exist. Okay, just you can adopt your own way. That is up to you. Either you can use the notional call approach, or either you can approach the deficit distribution approach. That is up to you. Nobody will stop you in that. Fine. Yeah, hope I answered for all the queries. Please, all of you, allow me to resolve further more questions, guys, because today is the last session. I don't want to waste much time here. Let me take up one more problem under liquidator final statement regarding problem number 9. Please, all of you come to problem number 9, guys, quickly. So can I start? All of you with me? Put your thumbnails, thumbs up marks quickly. Then I will proceed with the problem number 9. Quickly, guys. Put your thumbnails in the query box. Thumbs up symbols. Yeah. Concentrate. M Limited resolved on 31st December 2010 that the company be wound up voluntarily. The following were the ledger balances extracted from its books as on that date. As on that date means 31st December 2010, or you can call it as 1/1/2011, whatever the case may be. Equity shares were given, 9% preference shares were given, plant less depreciation 85,000, the amount was 2,15,000. Stock in trade, trade receivables, trade payables, bank balance, preliminary expenses, profit and loss account, outstanding expenses, including mortgage interest, 4% mortgage loan secured by a floating charge, 2 lakhs. On 1st January 2011, the liquidator sold M Limited's plant for 2,05,000. So this plant is there now, 2,15,000 plant is sold for 2,05,000. And stock in trade for rupees 2 lakhs. Inventory is there now, 2,50,000, which is sold for 2 lakhs. Okay. The sale was completed in January 2011. And the consideration, we are selling plant and inventory put together. Then consideration is satisfied as to 2,62,200 in cash. And as to the balance in 6% debentures of the purchasing company issued to the liquidator at a premium of 2%. Sir, what this is all about, sir? Please concentrate, all of you. Now, liquidator is going to realize two different assets. One is plant and another one is inventory. He is going to realize plant at 2,05,000. In the same way, he is going to realize inventory at 2 lakhs. Sir, liquidator is going to sell both plant and inventory to an outside company, actually, an outside company. For liquidator, that company is a purchasing company, no doubt about it. Now, 2,05,000 plus 2 lakhs is nothing but 4,05,000 is the total amount of PC recoverable by the liquidator from the company. The company is a selling company. You can assume just selling these assets to the other company. Now, out of that PC, 4,05,000, the purchasing company is going to issue 2,62,000 in the form of cash. 2,62,000 in the form of cash. Then the balance is how much? Balance. Can you please tell me, guys, all of you, balance is how much? 4,05,000 minus 2,62,000. The balance was 1,43,000. Such 1,43,000 in 6% debentures of the purchasing company, just they are giving. So this balance was 6% debentures of purchasing company. Now liquidator will get two different realizations in the form of cash 2,62,000, in the form of 6% debentures of the purchasing company for 1,43,000. Issued to the liquidator at a premium of 2%. That means the other company issued these debentures at the rate of 2% premium. Means if you assume the face value is 100, then the issue price is 102. Then may I know how many number of debentures are issued? Number of debentures, just I'm asking, number of debentures is equal to 1,43,000 divided by 102. How much? Oh, just a moment. The debentures premium is 2% only, right? This is not 2,62,000. I'm so sorry. It is clearly given 2,62,200. Just a moment. 2,62,200. And balance is how much? 1 lakh. 42,800. This is 1,42,800. Now 1,42,800 divided by 102. How much? How many number of debentures they need to issue? 1,400 debentures they need to issue. One more time I'm repeating. Liquidator is going to sell plant and inventory for 4,05,000. As a result, the liquidator will get to the extent of 2,62,200 in the form of cash and 1,42,800 in the form of 6% debentures of the purchasing company. During this case, number of debentures issued by the purchasing company to the liquidator were 1,400 debentures. That is the entire essence of paragraph number 1. Okay. The remaining steps in the liquidation were as follows. The liquidator realized 52,000 out of the book debts and the cost of collection amounted to 2,000. That means the net realization from the book debts were only 50,000. Because he realized 52,000 and realization expenses 2,000 means net realization from the book debts was only 50K. The loan mortgage was discharged on 31st January 2011. If you observe 4% mortgage loan is there, na? That mortgage loan is secured by floating charge, na? That was discharged as on 31st January 2011 along with interest from 31st July 2010. Now, the liquidation, entire liquidation was going to occur as on 1st January 2011, which was outstanding since 31st July 2010 means interest we need to pay from 1st August onwards to 31st December as well. For how many number of months may I know? 5 months, right? That is August, September, October, November, December. Exactly. For 5 months interest also I should need to pay along with this 2 lakhs. May I know 5 months interest means 2 lakhs into 4% into 5 by 12. Interest was 3,333. This is the approximation figure. Fine. Trade payables. 1 second, guys. One more thing. You should need to understand when it was discharged. 31st January, actually, not on 1st January. That's why 6 months, not 5 months. From 1st January 2011, the liquidation initiated, but when the real payment was made, 31st January 2011. So 31st July to 31st January will be 6 months only. I'm so sorry. So 6 months. So 6 months means 4,000 will be the amount. Fine. Next, let me read the further information. Trade payables for discharged subject to 2% and outstanding expenses excluding mortgage interest were settled for 2,000. Here trade payables are there now, settled at the rate of 98%. That point he told you in through point number 3. Sorry, 1 second. Through point number 2. Trade payables for discharged subject to 2% and outstanding expenses excluding mortgage interest were settled for 2,000. Now, out of this outstanding expenses excluding the mortgage interest settled for 2,000. What about mortgage interest, sir? We already done. Mortgage interest, outstanding mortgage interest related to 6 months was 4,000. We already explained related to that. Next, on 30th June 2011, 6 months interest on debentures were received from M Limited. M Limited means which is a purchasing company. Earlier, we sold 2 assets. One is inventory and another one is a M Limited plants. Sorry, another one is plant. Just a moment, guys. Who is M Limited actually? So M Limited is our company. I'm so sorry, guys. What he is telling, on 30th June 2011, 6 months interest on debentures was received from M Limited. Now, my question is, if our company is M Limited, then why again we are receiving from M Limited? Maybe this is print mistake. I think so. This is not M Limited. This is purchasing company. Why? Because we are getting PC from the purchasing company to the extent of 6% debentures of the purchasing company for the worth of 1,42,800. The number of debentures for 1,400 debentures. He is telling that on such 1,400 debentures, we are getting interest, 6 months interest. 6 months interest on this 1,400 debentures means 1,400 debentures into 100 into how much percentage of debentures we got actually previously? The debentures were 6% debentures into 6% into 6 by 12, because he is talking about the 6 months interest. Now 6 months interest means 1,400 into 100 into 6% into 6 by 12, which is 4,200. Now the important issue you need to understand here, due to realization of book debts as well as property, plant and equipment, we are getting the cash of 2,62,200 as well as worth of debentures for 1,42,800. Apart from that, we are also receiving interest on such debentures as a cash inflow, which you can utilize to make repayment to the other parties for to the extent of 4,200 interest. That point also important. So just be hold. I will explain or I will summarize one more time while putting that information into the OneNote. Okay, just give some time. Liquidation expenses amounting to 3,000 and liquidators remuneration of 3% on the disbursement to the members were paid on 30th June 2011, when the preference shareholders were paid out in cash and the debentures on M Limited and the balance of cash were distributed ratably among the equity shareholders. Prepare the liquidator statement of account showing the distribution. Now, the question is very much simple, provided your understanding ability is good. Now, one by one, sir, first let me start explaining the things related to this problem by putting the entire information in the format. Please be hold for a minute, guys, all of you. Let me first start with the format. This is the format. Now, at the time of realization of assets, liquidator will think only about one thing. How much we realized through assets not specifically pledged, how much we realized through assets specifically pledged. Now, if I start with assets not specifically pledged, I realized from plant as well as stock combinedly through realization of plant and stock. Combinedly, they realized in the form of cash 2,62,200, cash 2,62,200, and in the form of 6% debentures, in the form of 6% debentures of purchasing company, total 1,400 debentures. How much worth actually he got, guys? Here we check the balance was 1,42,800. And at this moment itself, you can also consider one more thing, because on this 6% debentures of the purchasing company, liquidator will also get certain 6 months interest. That point was clearly given in point number 3. On 30th June 2011, 6 months interest on debentures was received from purchasing company. That's why interest on such 6% debentures is also a inflow. Interest is how much? 1,400 debentures, face value assume 100, 6% for 6 months. How much, guys, interest? Which is 4,200. These are the total realizations from plant and stock actually. This is indirect realization from plant and stock, because this interest was realized due to 6% debentures. 6% debentures we got due to plant and stock. That's why I made it same column. Now the total realization from plant and stock, how much? Total 2,62,200 plus 1,42,800 plus 4,200. Total it will be 4,09,200. So in ANSP, is there any other assets are available? You can check here. Stock in trade considered, plant considered. These two were considered. Trade receivables. Is it trade receivables offered as a security? No. It was clearly given that trade receivables, how much we recovered. Anywhere it was given. Please check it, guys. The liquidator will realize 52,000 out of the book debts. That's why trade receivable also you can put under assets not specifically pledged. How much amount? 52,000. But out of which cost of collection were 2,000 means the net amount was only 50,000. That's why 52,000 minus 2,000, you can put it as 50,000. Is there any other asset not specifically pledged? Is there? Stock in trade over, plant over, trade receivables over. These 3 items over. Trade payable is a liability. Bank balance is there, which is also as an asset. Bank balance, which is also asset not specifically pledged. Bank balance, how much? 74,000. Fine. Is there any other asset not specifically pledged? Is there? Assets not specifically pledged. Preliminary expenses is not an asset, which is a fixed asset. Outstanding expenses 4% mortgage loan. Fine, guys. There is no other asset is available. All the assets we considered. And here asset specifically pledged. Is anything is there? Asset specifically pledged. All are assets not specifically pledged only. I think so. There is no asset available means there is no asset specifically pledged also available. Do we agree, guys? All of you? Nowhere it was mentioned. Any asset. This 4% mortgage line also secured by floating charge. It was clearly given. Don't think that 4% mortgage loan is a secured creditor with fixed charge, na sir. That's why ASP should be there, na sir. Don't think like that, because which is a secured creditor with floating charge. That's why there is no asset specifically pledged is available. Fine. Now let me start making payments, guys. First, sir, under making payments, the first and foremost payment was liquidator remuneration, because there are no legal charges are available. That's why you can go for liquidator remuneration of 3% on disbursements to members. So liquidators commission, but we are not paying liquidators commission right now. The reason was we should make payment for 3% at the time of making payment to shareholders. That's why ignore for the time being. Next, liquidation expenses. How much liquidation expenses? 3,000. Fine. So liquidation expenses over. Then Any of the preferential creditors are available here? Preferential creditors, please check. Any of the preferential creditors, taxes, okay, employee remunerations, investigation expenses, death or disablement compensation, anything is mentioned anywhere? I think so. There are no preferential creditors. You can go with secured creditors with floating charge, which was 4% mortgage loan. 4% mortgage loan. Sir, principal was 2 lakhs. Principal amount was 2 lakhs. No doubt about it. And it was also clearly given that interest on that mortgage loan was also discharged as on 31st July 2010. With interest we are discharging. So on that 6 months interest, guys, interest 2 lakhs into 4% into 6 by 12, which was 4,000. The total amount was 2,04,000. Fine. Next, guys. After that, any other payments are available? You can check here. One payment is trade payables, and another payment is other outstanding expenses. Okay. Any other payment apart from this? Mortgage loan just now we paid. So that's why please make payment for unsecured creditors, which was trade payable. This is secured creditor with floating charge. This is about unsecured creditor. 2 unsecured creditors are there. One is trade payable, guys. So trade payables, how much we are paying? 98%. That point was given in point number 2. Trade payables for discharged subject to 2%. So 98% means how much, guys? Just 73,500. Next, one more is there, which was outstanding expenses. It was also clearly given in that point. Outstanding expenses, we are settled for 2,000. Outstanding expenses excluding mortgage interest was settled for 2,000. Fine. Now 73 plus 2, how much, guys? 75,500. First, let us check whether the cash is available. Just we are paying without checking anything. Just all of you, please check whether the cash is available or not. This is 4,09,200, right? 4,09,200 plus trade receivables 50,000 plus bank 74,000 minus payments liquidation expenses 3,000 minus mortgage loan along with interest 2,04,000 minus unsecured payments 75,500. So still with me 2,50,700. Yeah. Still with me 2,50,700. Please all of you concentrate. I'll open the same thing here as well, just for cross checking before going to further. So the same thing, just I'm opening. If you can cross check here. Yeah. So total here we got 4,09,200 as cash inflow due to realization from plant and stock. I also the same. Trade receivable 50, bank balance 74. Absolutely fine. Liquidation expenses incurred. 4% mortgage loan I incurred. Unsecured trade payables also I incurred, which was 75,500. Am I right? Now with me 2,50,700 cash balance is there. Now what is your next step, sir? In the order of payment, the next I should need make payment to preference shareholders. Preference shareholder, how much I need to pay? 1 lakh. There is no arrears of preference dividend, nothing was mentioned. That's why you can go for preference shareholders payment. So preference shareholders, if you can go 1 lakh. Now the remaining cash balance with the liquidator was 2,50,700 minus 1 lakh means 1,50,700. Now that 1,50,700 you should need to distribute among whom? Equity shareholders. Out of which it is clearly given, please concentrate in the last point, the debentures of M Limited and the balance of cash were distributed ratably among the equity shareholders. Now please all of you concentrate here. Resource available or surplus available. Resource or surplus, whatever the case may be. Surplus available to equity shareholders. How much, guys? Equity shareholders, how much surplus available? 1,50,700 surplus available. Out of this 1,50,700, these 6% debentures of purchasing company, how much? 6% debentures of purchasing company, how much? 1,42,800, because that is not in the form of cash, that is in the form of debentures, and the other form entirely in the form of cash. Now because except this remaining, the entire form is in the form of cash only. So the remaining was 1,50,700 minus 1,42,800. That is 7,900. This is about the cash. Now consider it, guys. So do you thought that still we are having 7,900 cash with us? That's wrong. Why? I will tell you. Please concentrate. While making payment to the preference shareholders, liquidator will get the commission. How much amount of commission liquidator will get? 3%. So the first type of remuneration was 1 lakh into 3%. So that will be 3,000. So that means 3,000 cash was reduced due to liquidator remuneration, means minus 3,000 was outflow, means still we have 4,900 cash only. Now please all of you concentrate here. To pay equity shareholders as well as liquidator, we are having how much amount of cash available or the debentures available? Total 1,42,800 plus 4,900. Total we are having 1,47,700. Now which is not sufficient to make repayment to the equity shareholders, because equity shareholders was 2 lakhs amount. That's why while calculating the liquidator remuneration, the cash or the surplus available into R by 3 by 100 plus R. Now you will get the liquidator remuneration into 3 by 103, which was 4,302. Now you can add that 4,302 here. Now total remuneration 7,302. If you reduce 4,302, then the remaining cash balance was 4,302. If you reduce, the remaining cash balance how much? 598. Now amount available to equity shareholders 598 cash and 1,47,700 worth of debentures. Now put here to equity shareholders, how you are distributing? 6% debentures of purchasing company were 1,42,800 and the remaining balance of cash 598. This is the distribution, guys. So 598 cash, debentures of purchasing company 1,42,800. One more time I'm explaining the final distribution. Please all of you concentrate. Surplus available to equity shareholders before making payment to liquidator commission was 1,50,700. Now the first liquidator commission was, you are making payment to preference shareholders. That's why liquidator commission will be 1 lakh into 3%. That will be 3,000. Now I reduced. Now the remaining balance available was 4,900 cash, 1,42,800 worth of 6% debentures of the purchasing company. Now you can find out the second type of liquidator remuneration. That is 1,47,700 is the total availability multiplied with 3 by 103. Then 4,302 is the liquidator remuneration. Now the total liquidator remuneration will be 7,302. Now if you check what is the amount available exclusively for equity shareholders, sir, 1,42,800 worth of 6% debentures and the remaining 598 cash balance, just you can provide to the equity shareholders equally, because there is only one class of equity shares are there here. There is no other class is possible. That's it, guys. This is the end of problem number 9. Now let me know, guys, if you have any doubts in this problem quickly. Before proceeding with further, if you have any doubts in this, please let me know. Quickly, guys. Sir, the debentures on unlimited is written because that are given as consideration in first para of adjustment. Is it correct? Absolutely. Here, as like cash, they are giving the debentures. There is no other difference. You are correct. Quickly, guys, is there any other doubt? Sir, just regarding the liquidator final statement, you need to read the question line by line. That is the only task you should need to do. Unless otherwise here there is no concept involved at all. Sir, from which party, which thing we are realizing? From which party, how much we are paying? In which order? That is more than enough. Yeah. Hope all clear? Fine. Yes, guys. Next. One more problem is there. Actually, I need to discuss related to liquidator final statement. But before that, please let me allow to explain things related to list B contributory. Then after that, if time is available, then I'll go with the other problem. Okay. Yes, please all of you concentrate on list B contributories concept, guys. I'll explain the concept of list B contributory through my notes. So before that, a small intro just I want to give in my OneNotes. Sir, who are all list A contributaries? Who are all list B contributaries, sir? First, can you please explain that before explaining the concept? From the inception of this chapter, you're always talking regularly about list A contributaries and list B contributaries. Who are all, sir? Whenever the company decided to liquidate due to order made by NCLT or maybe due to any other reason, then the insolvency professional will be appointed, right? Whenever the insolvency professional will be appointed, I already told you, all the shareholders are treated as contributaries. All the shareholders are treated as contributaries. Those are not the shareholders. Now, list A contributaries means shareholders which exist as on date of liquidation, are known as list A contributaries. Who are all the shareholders? Exist as on the date of liquidation is known as list A contributaries. Now, for example, if certain partly paid up equity shares are there, let us assume 10,000 partly paid up equity shares are there. Face value is 10 rupees, but the paid up value was, let us assume 6 rupees. Then which were partly paid up. Now, during the process of liquidation, if the liquidator is not having sufficient cash to make repayment to the various liability holders, then he can have a right to ask call money from this partly paid up equity shares or from this partly paid up equity shareholders. Am I right or wrong? Now, if this partly paid up equity shareholders are unable to contribute money to the company or unable to contribute money to the liquidator, then liquidator will have a choice to ask money from the list B contributaries. Now, once again, I'm repeating. Liquidator made a call. Then the existing equity shareholders are unable to repay. Then definitely we can treat it as a calls in arrears. If nothing is mentioned, then we are excluding this amount while making call money from the equity shareholders. We know that point. We already done such adjustment in one of the problem. Now I'm extending the issue that if at all list B contributaries exist, if the list A contributaries are unable to contribute the money, then the liquidator cannot treat it as calls in arrears. The liquidator cannot treat it as calls in arrears. Liquidator have a second choice to ask that money from the list B contributory. Then the next question coming into my mind is, who are all these list B contributaries, sir? Who are all these list B contributaries, sir? Concentrate. List B contributaries are those shareholders. I'll explain here itself. Just a moment. List B contributaries are those shareholders who transfers their shares. List B contributaries are those shareholders who transfers their shares to the other parties during the preceding 12 months from the date of liquidation. from the date of liquidation. List B contributaries are those shareholders who transferred shares to the other parties during the preceding past 12 months from the date of liquidation. Sir, that means what you are trying to tell here. For example, a party called X. X transferred shares to the Y. These 10,000 shares are there now. How such 10,000 shares are there? Originally holded by Y as on date of liquidation. Sorry, not originally. As on date of liquidation holded by Y, which were actually originally holded by X in the past preceding 12 months. Let us assume the date of liquidation was 31st March 2022. Now from 1/4/2021, you need to check who all made transfers. X made transfer of shares to Y, 10,000 shares. Now, as on date of liquidation, first liquidator will ask money from Y. If Y is unable to make repayment, then liquidator can ask money from X. Now, X is the list B contributory, Y is the list A contributory. That is the point he is mentioning. So that means, who are all the shareholders who actually transferred in the past 12 months? You want to blame? Yes, absolutely. Why, sir? Those are the innocent people now. They don't know anything about the current creditors, anything about current liabilities as on date of liquidation. Guys, here you need to understand one more point. I am also not blaming them. The liabilities which are exist as on date of liquidation straight away. I mean, those liabilities which are actually incurred by the company, those liabilities are those obligations which need to occur or which need to pay after date of transfer and before the date of liquidation. I don't want to blame such liabilities. Those liabilities which are exist as on date of transfer. For example, on this date, creditors was exist for 8,000. Creditors for exist for 8,000. I'm only blaming for such creditors because the liability was exist as on date of transfer and continue to be exist as on date of liquidation as well. That is the reason why I am blaming such contributaries. Sir, if any other liability was occurred after date of transfer and before date of liquidation, I don't want to blame. For example, the total creditors as on date of liquidation was 15,000, sir. Out of such 15,000, 8,000 was exist as on date of transfer. After transferring of the shares, another 7,000 liability was incurred by the company. Then on such 7,000, list B contributaries are not responsible. Or here in this case, X is not responsible. Y is only responsible. But on this 8,000, X is responsible. If Y unable to pay, then liquidator can ask money from X. So then what you are trying to tell here, sir? The maximum liability of list B contributory is maximum liability of list B contributory is unpaid value, number of shares transferred with multiplied with unpaid value, number of shares transferred into unpaid value. Here, how much number of shares transferred? 10,000 shares. Unpaid value, how much? 4 rupees. That equal to 40,000. Or liability exist at the time of transfer. At the time of transfer. How much liability exists at the time of transfer? 8,000 liability only exists, which was 8,000. Whichever is lower. 40,000 or 8,000, whichever is lower, that is 8,000 only. So now come to my main notes, all of you. List B contributories liability when exist? When the list B contributory liability exists? Existing cash balance with the liquidator is insufficient to make payment to any liability holders, as well as the existing partly paid up shareholders are unable to make call money. Then only list B contributories liability is coming into existence. Sir, if the cash availability with the liquidator is sufficient to make repayment to all liability holders, then list A contributory liability not at all exists. Then how list B contributory liability exists? I'm repeating once again. If the cash available with the liquidator is sufficient to make repayment with all the liability holders, then we are even not asking money from the existing equity shareholders at all. Nah? Rather than asking money, we are distributing the surplus. That's why when the list B contributory liability exists, first of all, the cash available with the liquidator is insufficient to make repayment to the liability holders. And not only that, the existing partly paid up equity shareholder, that is nothing but list A contributor, is unable to contribute the call money. Then the list B contributory liability coming into exist. Now, I'm explaining the entire concept through a small example. Date of commencement of liquidation 1/4/2020. Who are all the shareholders who actually made transfers after 1/4/2019 are simply call it as list B contributories. Now, as on 1/5/2019, Mr. A transferred 5,000 shares to Mr. B. Paid up value was 5 rupees. Face value was 10 rupees. Now the unpaid value 5,000 into 5 or outstanding liability as on date of transfer 6,000, whichever is lower as a liability of list B contributories. Therefore, liability of list B contributories is creditors exist as on date of transfer and continue to exist as on date of liquidation, or unpaid value of the shares transferred, whichever is lower, you can treat it as a list B contributory liability. That is the point he is mentioning. Okay, fine. Sir, the same concept we can explain through a small example, guys, or directly I will take a problem, not example. If one list B contributory is there, just now you told how to calculate the liability of list B contributories. If more than one list B contributory is there, then how we need to calculate the liability of list B contributory, sir? Again, I'm repeating, if one list B contributory is there, simply we can check that how much outstanding balance of creditors exist and how much unpaid value of equity shares are there, whichever is lower, you can take it as a list B contributory liability. Super. But if more than one list B contributory is there, generally, practically that will occur. More than one transfers are occurred in the preceding past 12 months. Then how you can able to calculate the list B contributory of each and every person? That point we are going to see through a particular problem, which is problem number 10. Sorry, not 10. We ignored that problem previously. What is that? Problem number 4. Please, all of you come to problem number 4 quickly. Problem number 4. Are you with me, guys? All of you? Quickly, guys. Preference dividend for the year 2000 is given. We have to ignore that now. Which point you are asking, ma? Preference dividend or something you are talking? Namrata. Where preference dividend is given? In the last problem you are talking? Where it is, ma? Sorry, which one you are asking regarding the last problem? So I already shifted to this problem, guys. No worries. If anything doubt is there, I'll resolve at the end. Please don't affect my flow. Let me continue with problem number 4. In a liquidation which commenced on April 2nd, 2011, certain creditors could not receive the payments out of the realization of assets and out of the contributions from A-list contributories as well. The following are the details of certain transfers which took place in 2010 and 2011. So first point here you need to understand is the date of liquidation was clearly given that April 2nd, 2011. Two 4/2011 is the date of liquidation. Now, can you please tell me what are all the transfers made after 3/4/2010 to 2/4/2011? Such all transfers we can call it as list B contributories. Am I right or wrong, guys? This is nothing but preceding 12 months to the date of liquidation. Okay. Shareholder X transferred 1500 shares as on 1st March 2010. Sir, if it was happened before 3rd April 2010, 1st March means he is not a list B contributory. X is not a list B contributory, guys. He is not a list B contributory. A transferred as on 1st May, B transferred as on 1st July, C transferred as on 1st November, D transferred as on 1st February 2011. All these guys are list B contributories. A, B, C, D are list B contributories without having any second doubt. Okay, fine. Sir, number of shares transferred were clearly given. And creditors outstanding at that particular point of time also given. All the shares for 10 rupees each, 6 rupees paid up, ignoring the expenses of and remuneration to the liquidators, etc. Show the amount to be realized from the various persons listed above. Now from X, nothing we can realize straight away. From A, B, C, D, how much we can need to realize in the form of list B contributories we need to calculate. Now consider it, guys, all of you. Sir, here total parties 4 after exclusion of X. A, B, C, D. What we are calculating? Liability of list B contributories. Liability of list B contributories. So this is related to particulars. Concentrate. Sir, now what is the maximum liability of list B contributories? I know one thing, that is nothing but unpaid value of shares transferred or creditors outstanding as on date of transfer. Whichever is lower is the maximum liability of list B contributory. We know that. Now, the first and foremost question I am asking you, number of shares transferred by each and every list B contributory. Number of shares transferred. A 1500 shares transferred, B 1000 shares transferred, C 300, D 200. Am I right, guys? These are number of shares transferred. Face value, can you please tell me, all of you? Face value how much? 10. Paid up value how much? 6 rupees. Directly I'll put the paid up value, that's better, which was 6 rupees is the paid up value for all the equity shareholders. 6. Here also 6 rupees is the paid up value. Am I right? So if 6 rupees is the paid up value, may I know the unpaid value is how much? 4 rupees. May I know the unpaid value? 4 rupees per each and every equity shareholder. Fine. Now my question is, sir, 4,000 creditors for initially exist. Just ignore that. That was at the time of making transfer by X to the other party. That's why you can ignore. From here onwards, you can check. At the time of making transfer by A to the other party, how much creditors for exist? 6,000 was exist. Am I right? Now, for this 6,000 creditor, who are all responsible? Is it only A or A, B, C, D? I'm repeating one more time. A transferred certain shares to other party. Let us assume Z. At the time of making transfer, 6,000 creditors balance is there. No doubt about it. Anyway, A is responsible straight away. I'm also telling that apart from A, B, C, D are also responsible. You know why? Because here it is given that creditors remaining unpaid and outstanding. Now in this 7,500, 6,000 is there. In this 8,000, 6,000 is there. In this 9,500, 6,000 is there. That means for this 6,000, A is responsible, B is also responsible, C is also responsible, D is also responsible. Because in this 9,500, 6,000 is there, 8,000 also 6,000 is there, 7,500 also 6,000 is there. That means for that creditors 6,000 outstanding. Creditors 6,000 outstanding. A, B, C, D all are responsible in the ratio of the shares transferred by them. Now 6,000 ratio 15 is to 10 is to 3 is to 2. Now 6,000 into 15 by 30, 3,000. 6,000 into 10 by 30, 2,000. 6,000 into 3 by 30, 600. 6,000 into 2 by 30, 400. This is the order of liability. Next, please concentrate. Next, creditors, what we should take into consideration, the excess, because 6,000 we already covered now. The excess from 6,000 to 7,500, incremental amount how much? 1,500. On this 1,500, who are all responsible? You know, A is not at all responsible because this 1,500 was occurred after making transfer of A to the outside party. That's why only B, C, D are responsible. On this 1,500 creditors, only B, C, D are responsible in the ratio of 10:3:2. Now, here it is 1,000. Here it is 300. Here it is 200. Do we agree? Like that, from 7,500 to 8,000, only 500 C and D are responsible. Sir, C and D are responsible means in the ratio 3:2. That is 300, 200, they are responsible. Next, 8,000 to 9,500, for 1,500, only D is responsible. There is no other party because the excess of 1,500, only D is outstanding. There is no other party. Now you can check the total outstanding by each and every individual party. 1,500 plus 3,000 here, 4,500 creditors you should need to contribute. For related to B, 1,000 plus 2, 3, 3 plus 1, 4, which is 4,000. Related to C, 3, 6, 9, 3, 12 plus 3, 1,500. Related to D, 1,500 plus 200, 17 plus 2, 19 plus 4, 2,300 plus 200, 2,500. To that extent of creditors, they should need to contribute. Now, the maximum liability of the list to be contributor is creditors outstanding as on date of transfer or unpaid value of the shares transferred. Unpaid value of the shares transferred means you should multiply it with 4. Number of shares into 4. 1,500 into 4, 6,000. 1,000 into 4, 4,000. Next, 300 into 4 means 1,200. Next, 200 into 4, 800. This you can call it as A. This you can call it as B. Whichever is lower is A, list B contributor is liability. Whichever is lower, 4,500 here, here 4,000, both are same. Here 1,200, here 800. This is all about list B contributor is liability, guys. The only one important issue you need to know, whenever more than one list B contributor exists, then for that outstanding creditors who are all responsible, you should need to check. Because for this 6,000 outstanding creditors, A, B, C, D all are responsible. That's why you need to distribute such liability in the ratio of the shares held by them. And for the excess of 1,500, only B, C, D are responsible. A is not at all responsible. Like that, first you should need to check for each and every individual contributor how much creditors worth he is responsible. Then you can compare with the unpaid value of the equity shares. Whichever is lower, you can take it as a list B contributory liability. That's it, guys. I put in reverse now. A should have 1,000 shares. B should have 1,500. Oh, my dear. I'm so sorry. I think so. Then this ratio was wrong. So just you can assume that I don't want to change the answer. Just I'm changing this one. What is that? You know, A is holding 1,500 shares. B is holding 1,000 shares because my answer is based on that one only. Just now I realized A is actually 1,000, B is 1,500. But if you check here, A put 1,500, B 1,000. Just you can assume that my entire problem was based on this. A is 1,500, B is 1,000. Then I am giving homework. HW, what is that? The real problem I am giving homework. Please all of you complete that as homework. What is that homework? A is actually holding 1,000 shares. B is actually holding 1,500 shares. Here, if you observe, I clearly completed the problem based on that. A is holding 1,500 shares and B is holding 1,000 shares. But you can take the alternative. What is that alternative? A is holding 1,000 shares. B is holding 1,500 shares. Based on that, please complete the problem as an HW. The original problem is an HW, guys. I made the answer on the assumption that A is holding 1,500, B is holding 1,000 shares. Is it okay, all of you? The concept is same, guys. Concept is same. Don't worry. Hope you understand. Now, let me explain the concept of statement of affairs, guys. All of you, please consider it here. Statement of affairs. So list B contributory concept also sometimes they may test it in the examination. Please all of you check with this problem. Statement of affairs, conceptually, there is no need to discuss much. And for problematic wise also, this is not much important as like the other concept. Okay, but still I'm taking it to discussion. Please concentrate. Statement of affairs. One thing you need to remember, statement of affairs, the components we are going to present under different list, you know. List A, ANSP, list B, ASP, list C, preferential creditors, list D, secured creditors with floating charge, list E, unsecured creditors, list F, preference shareholders. Next, list Z, equity shareholders. Fine. Sir, in generally, how the statement of affairs is going to be present, sir? Please concentrate, friends. There is a format given in the Companies Act 2013. Board of Directors should need to present the entire statement of affairs in that format only. That ultimate statement of affairs should need to make it hand over to liquidator. And in statement of affairs, what are the values they mention? All are at estimated realizable value, not the actual realized values. Now, statement of affairs starts with list A, assets not specifically pledged. So here assets not specifically pledged means particulars, estimated realizable value of assets just we are giving. Those assets which are not offered as a security at the time of availing any loan are clearly put under list A. One more thing you need to remember here, calls in arrears also we should take into consideration under assets not specifically pledged as well. Calls in arrears also they are treating as an asset. Why, sir? Sir, board of directors really they don't know whether they can able to get money from the calls in arrears or not. When at the time of realization, at the time of making call to such shareholder, then liquidator will check really whether we are getting money from such equity shareholders or not. That's why unless otherwise specifically mentioned, board of directors will estimate that they will get money from the calls in arrears as well. That's why calls in arrears also they can take into consideration as asset not specifically pledged, because these are the estimates, not the actuals. Before occurring of the actual realization, this is estimate made by the board of directors. That's why board of directors can estimate that we can get a call from the, we can get a money from the calls in arrears, such equity shareholders. That's why they are putting under assets not specifically pledged as well. Next, that precaution you should need to consider. Sir, what are all the different assets you can consider here? Estimated realizable values also you can consider here, which are simply known as ERVs. ERV means estimated realizable values. Next, asset specifically pledged. For example, inventory, or for example, building offered as a security for a bank loan. Now, the building estimated realizable value how much? Which was 10 lakh. Against that building, secured creditor with fixed charge. That bank loan was how much? Let us assume in first case, the bank loan was 8 lakhs. Sir, I realized 10 lakhs, but the loan was 8 lakhs. Still 2 lakh surplus is there na? Such surplus cash of 2 lakhs, you can carry forward to the last column. No. Let us assume the secured creditor against the building was 13 lakhs. Now all of you, the realization of building is not sufficient to cover the bank loan. Still 3,000 is the deficit. Then you can rank such deficit as an unsecured creditor, because you know already out of this 13 lakhs, you can able to repay 10 lakhs out of the realization through building. What about the remaining 3 lakhs of the bank loan, which you can treat it as an unsecured creditor? That's why deficit is treated as unsecured creditor. Simply, at the time of comparing the ASP with secured creditor with fixed charge, if ASP realization is greater than the secured creditor with fixed charge, the excess you can treat it as a surplus and carry forward to the last column, which is the total balance available, which is the total balance available to make repayment to the various parties, which is the total balance available to make repayment to the various parties. No. which is the deficit, sir. If that is the deficit, you can rank it as a unsecured creditors. The same thing actually we mentioned in liquidator final statement. If you observe, please concentrate here. Where it is. This is the liquidator final statement format. What we made, assets not specifically pledged, we clubbed it. Whenever asset specifically pledged is there, we are comparing that particular asset with the loan against that asset. The surplus we are carry forward to the last column. These are the surplus of cash available to make repayment to the various parties. In the similar mode, here we are just estimating. Sir, from assets not specifically pledged, we have this much of amount. Surplus of the cash after making settlement with the secured creditor with fixed charge, we are having this much of surplus. No, sir, we are not having any surplus. Then here nil. And the deficit you should need be ranked as a unsecured creditor. Next. This is the assets available for preferential creditors, secured creditors with floating charge, and unsecured creditors, as well as preference shareholders, as well as equity shareholders. But just we are writing assets available for only liability holders, preferential creditors, secured creditors with floating charge, and unsecured creditors. Sir, what about legal charges, liquidator remuneration, liquidation expenses, all other stuff, sir? For the entire statement of affairs, board of directors will ignore legal charges, liquidator remuneration, liquidation expenses. You know why? Before appointing the liquidator, they are preparing the statement of affairs. How they will know how much liquidator remuneration really payable to the liquidator? Sir, how much liquidation expenses may be incurred by the liquidator? How they will know? Because if I am in the process of realization of assets, then board of directors then estimate that how much expenses they might incur. But these all are estimates. That's why legal charges, liquidator remuneration, liquidation expenses were clearly ignored while preparing the statement of affairs. That's why I'm telling that these assets are available for preferential creditors, secured creditors with floating charge, and unsecured creditors. Do you understand, all of you? Fine. Come down, all of you, come down. Sir, these all are assets, we understand. Sorry, these all are assets realization, out of which we should need make payment to preferential creditors first. Sorry, here it is there. Sorry. First, we should need make payment to preferential creditors as per list C. After that, we should need make payment to secured creditors with floating charge. After that, we should make payment to unsecured creditors. Then preference share capital to the extent of paid up capital. Then equity share capital to the extent of paid up capital. If the entire paid up capital we put, then the amount was coming as a negative figure, then we can treat it as a deficit. Because in the estimate, what we are estimating, how much cash available is there, that available just distribute among the equity shareholders. Now, we don't do like that. Just we are comparing the total cash availability with the liquidator and the total paid up value of preference share capital and equity share capital. That's why if any negative figure is there, we can term it as deficit. If any positive figure is there, we can term it as a surplus. Hope you understand the broad line. Now, concentrate, all of you. After presenting the list A and list B, summary of gross assets information you should need make to present. What is the meaning of summary of gross assets, sir? Summary of gross assets means the total worth of assets not specifically pledged plus how much amount actually you recovered from realization of the building. That is before knockoff with the secured creditors with fixed charge. That is total of ANSP and a total of ASP. ASP is before knocking off with the secured creditors with fixed charge. What is the total? Just this is informative in nature. Summary of gross assets information you should need to provide, which is the gross balance available. Then you should need make present the liabilities in this format. Left hand side is one amount. Right hand side is one amount. Right hand side is the net amount, which is the correct amount column. Left hand side is the total gross liabilities column. Total gross liabilities is how much? Because one of the liabilities exists as secured creditors with fixed charge. That secured creditors with fixed charge also you should need make present under the liabilities head, but which was not presented under the net column. Do you know the reason? We already paid under list B itself. We already paid in the list B itself That's why under net column, don't present it. Just under gross column, make it present it. Do you understand? Then assets available to preferential creditors, secured creditors with fixed charge and unsecured creditors. Just this figure carry forward here. This figure carry forward here. Carry forward here. Whatever the assets available for preferential creditors, secured creditors with floating charge and unsecured creditors is available for list A total and list B total, the same figure you can make it present. From here, start making payment to the various parties. First, preferential creditors as per list C. After making payment to the preferential creditors, how much worth of assets available for secured creditors with floating charge and unsecured creditors, please check. Then make payment for secured creditors with floating charge as per list D. Then you can check estimated assets available as regards secured creditors with floating charge. As regards means after making payment to secured creditors with floating charge, how much estimated assets are available. Then start making payment to unsecured creditors. Then you will know estimated assets as regards unsecured creditors is how much, or nothing but assets available to shareholders how much. Then make payment for preference share capital for list F to the extent of unpaid value. Then to the extent of list G equity share capital. Sorry, not unpaid value, paid up values. To the extent of paid up value, we should need make to repay. Let us assume. Then you will know if the figure is negative, which is deficit. If the figure is positive, then you can term it as a surplus. Legal charges, liquidation expenses, liquidator remuneration, and the realization expenses are ignored for throughout the statement of affairs problem. Is it okay, guys? All of you? Now, let me explain the same thing through a problem, guys. Please, all of you take a problem, which is problem number 11. Sir, statement of affairs is a format based, guys. That's why I don't want to give that much of importance, and which is lengthy as well. Okay, nothing is there, but which is lengthy. Please concentrate. X Limited was ordered to be wound up on 31st March 2012. On which date the following balances were extracted from its books: goodwill, building, plant, fixture, stock, debtors, cash, P&L account, debit balance, equity share capital is there, 5% debentures secured by floating charge on all assets, interest payable on these debentures, bank overdraft secured by a hypothecation of stock. Means the stock is ASP. Means this bank OD is secured creditor with a fixed charge. Next, creditors information was given. The amounts estimated to realize are goodwill, building, plant, fixtures, stock, debtors. Okay. Creditors included 6,000 on account of wages of 15 men at rupees 100 per month for 4 months immediately before the date of winding up. Entire 6,000 is preferential creditor. No doubt about it. Because loss out of the preceding 12 months, any 4 months salary, you can treat it as a preferential creditor. Creditors. Regarding the creditors, he is talking. Here, the creditors amount total was 36,000. Out of this 36,000, 6,000 is a preferential creditor straight away. Rupees 9,000 being the salaries of 5 employees at 300 rupees per month for the previous 6 months. For the previous 6 months. Can you please tell me, guys, all of you? 9,000 being the salaries of 5 employees. For each employee, only 4 months salary I should need to consider as a preferential creditor. 4 into 300 per employee 1200. 1200 into 5 employees 6,000. That means out of this 9,000, 6,000. Another 6,000 only the preferential creditor. What about the other 3,000? 3,000 is the unsecured creditor. Okay. Next. Rent for the godown for the last 6 months amounting to 3,000, which is pure unsecured creditor. Income tax deducted out of salaries of the employees was 1,000. Yes, 1,000 is also a preferential creditor, and director's fee was also a 500. Director is not an employee. That's why director's fee is also an unsecured creditor. So out of this 36,000, 6 plus 6 plus 1, 13,000 is only the preferential creditors. Means what about the remaining balance, guys? 13 minus 36, 23,000. This 23,000 is a unsecured creditor. Indirectly, he is conveying that out of these creditors of 36,000, 13,000 is the preferential creditor and 23,000 is the unsecured creditor. That is the information they are providing through paragraph number 2. 3 years ago, all such information is not related to statement of affairs, guys. This is related to statement of deficiency. I not yet explained with you. Don't worry. Up to here, which is related to statement of deficiency, just wait. In addition, it is estimated that the company would have to pay, in addition, and apart from the above creditors, it is estimated to pay 5,000 as compensation to an employee for injuries suffered by him, which was a contingent liability not accepted by the company. But any death or disablement compensation is also a preferential creditor, guys. That means the total preferential creditor was not only this 13,000, but also the 5,000. So 13K plus 5K. Total 18,000 is the preferential creditor. That point indirectly he is conveying through this paragraph. Okay. Prepare the statement of affairs and the deficiency account. You don't know anything about deficiency account. Please all of you concentrate about the statement of affairs first. Now let me open my printed notes here. Concentrate. Printed solution, not the printed notes, which was the last problem. Concentrate, guys, all of you. Statement of affairs of X Limited happened on so and so date. We are start with list A, AN, SP. Estimated realizable values. This is about particulars. This is ERV. Except inventory, remaining all you can consider. Except inventory, remaining all you can consider, guys. Just a moment, please. Yeah, concentrate all of you. Out of these assets, except inventory, you can consider the remaining all under ANSP. So start with goodwill. How much is given for the realization of different assets? Goodwill 1,000. Yes, considered here. Next, building 3 lakhs, considered here. Next, plant 5,25,000. Don't check with the balance sheet values. Check with the estimated realizable values. Plant, how much was given? 5,25,000. Fixture was given at 10,000. Yes, fixture was given at 10,000. Stock 31,000. Don't consider here because which was ASP. Debtors 20,000. So you can consider debtors was also 20,000. And cash balance is also available. Cash is realization value, estimated value, or book value, all are same. That's why cash you can directly consider, which was 500. There is no arrears. Calls in arrears was given. That's why no need to take up, which was 8,56,500. Now you can consider the ASP, which was stock. From stock, you are getting 31,000, right? Stock, you are getting 31,000. Out of 31,000, you should need repay for bank OD. Bank OD how much? 25,000. Pay the bank OD 25,000. Surplus was 6,000. Carried forward to the last column. Total assets available 8,62,500 for preferential creditors, debenture holders, and unsecured creditors. Just a summary of gross assets information just to show for the informative in nature. That is 8,56,500 plus 31,000 is the summary of gross assets. Just make it present. Then coming for the gross liabilities. First and foremost liability, secured creditors with fixed charge. Only shown under the gross column, don't show under the net column, which was 25,000. So shown under the gross column, not shown under the net column. Next, start with preferential creditors. Just now we calculated preferential creditors was 18,000. So pay such 18,000. Now, out of this 8,62,500, if you paid 18,000, the remaining balance was 8,44,500, which is the estimated balance of assets available for debenture holders as well as for unsecured creditors. Out of that, for debenture holders, 1,60,000, interest was 4,000, total 1,64,000, paid that as per list D. Then the estimated assets as regards the secured creditors with floating charge was 6,80,500. Then unsecured creditors, we already decided which was 23,000 as an unsecured creditors. So 23,000 was an unsecured creditor. Then the remaining balance was 6,57,500. Then start making for paid up value of equity and preference. Here in the problem where the equity and preference share capital was given. Here not exist. Come down, guys. Where it was given equity and preference share capital. Here it is there. Equity share capital 10 lakhs is there. Put the paid up capital. Then 6,57,500 minus 10 lakhs means 3,42,500 is a deficiency, which is known as deficit. Now consider it, guys, all of you. Whatever the deficit we got through statement of affairs, we can make it prove through other statement, which is called statement of deficiency, which is list H. Through statement of affairs, just a second. Through statement of affairs, whatever the surplus or deficit we got, the same thing we can able to prove through list H, which is called statement of deficiency. Maybe sometimes in the problem, they're also asked to prepare statement of deficiency list H along with the statement of affairs. If you observe, statement of affairs will be closed with list G along with the equity shareholders, that is list G. After list G, list H, which is statement of deficiency. Sir, one thing I am asking here, a quick question. The surplus or deficit, we are talking in whom point of view? The surplus or deficit, we are talking in whom point of view? Always equity shareholders point of view. Now, in equity shareholders point of view, how you are getting this surplus or deficit, we are going to explain through statement of deficiency, which is called list H. Now, all of you, equity shareholders, if they got the surplus, why they are getting surplus? If equity shareholders, they are end up with deficit, why in general they are end up with deficit? Just I am asking you. Sir, if the company is attaining profits continuously, they may get the surplus. Or maybe not for operating profits, maybe abnormal profits. Abnormal profits means if maybe due to insurance claims during the earthquakes, maybe due to sale of any particular asset at the abnormal price, such all abnormal gains, or they may get the profits or the surplus due to at the time of realization during the process of liquidation at more than book value. I am telling you one more time. There may be a reasons for surplus are P&L account balance, that is profits, or abnormal profits. This is operating profits. This is abnormal profits. Or maybe that due to the reason of realization profits. Realization profits means not due to business activities. During the process of liquidation, if the liquidator is able to realize at more than book value, then he may end up with profits. That is the reason for getting surplus by the equity shareholders. If the equity shareholders end up with deficit, then what will be the reason, sir? The reason may be losses, P&L losses, or maybe the abnormal losses. No, sir, they are getting profits only, but during the continuation of the business, they are continuously distributed the dividends as profits. That's why at the time of liquidation of the company, they may end up with deficit. That is profit-making company only, but during the business continuation, they may entirely distribute such dividends, sir. That's why the existing reserves and surplus was entirely vanished. That's why they may end up with a deficit. That is distribution of dividend payments. Maybe the realization losses. That is at less than book value, we are selling the assets, sir. At more than book value, we are paying to the liability holders, sir. Then the realization losses. There may be reasons for contributing the deficit. If you are combine these both two, then you may know why surplus or deficit is ultimately derived by the shareholders. Do we agree, all of you? So that means in statement of deficiency, what you are trying to establish, sir, what I am trying to establish, what are the different factors contributing the surplus? What are the different factors contributing the deficit? If I made it total, then I'll go the net surplus or the net deficit, which should need to be equal to deficit or surplus, what we derived under the statement of affairs. So now to complete the statement of deficiency, one cutoff date at least we should need to consider. One cutoff date before the date of liquidation. For example, if this is the date of liquidation, if this is the date of liquidation or date of completion of the liquidation, whatever the case may be, let us assume which is the date of liquidation. At least you can consider 3 years back. Who told, sir? Companies Act 2013 clearly established a fact that to prepare the statement of deficiency, at least you can go back for 3 months. So, sorry, 3 years. Why, sir? From the past preceding 3 years, what is happening? Then you should need to prove how much deficit or how much surplus will be there as on date of liquidation or date of completion of liquidation, whatever the case may be. That means from here, what I should need to check here, sir, from here, first, as on this date, is it accumulated profits you have or accumulated losses you have? I mean, as on this date, you need to check assets minus outside liabilities minus share capital. Then what you will get? Reserves and surplus. If such reserves and surplus is positive, you can take it as a profit. If such reserves and surplus as a negative, you can take it as a loss, which is the base point. From here onwards, what are all the different factors contributing the surplus? You should need to check. What are all the different situations contributing to deficit? You need to check. Now, I already explained factors contributing for the surplus. Factors contributing for the surplus. What are the factors? Tell me, guys. Profits, abnormal gains, realization profits at the time of liquidation. You should need to adjust such things. Next, what are all the different factors contributing for the deficits? Maybe in any particular year losses, maybe abnormal losses, maybe dividend distributions, maybe realization losses. All such factors you should also need to adjust here. Then you can get surplus or deficit, which is as per statement of affairs. Now the same thing I'm putting in my notes here. Consider, guys, which is list H, statement of deficiency or surplus, statement of deficiency or surplus, telling about reasons for surplus or deficit arised in statement of affairs. Why in statement of affairs you got the surplus or deficit? At least you can go back for minimum 3 years as per the provisions contained in Companies Act 2013. Here at this particular scenario, that is go back for the 3 years means here as on 1/4/2017, you can check with assets and liabilities plus capital. If assets is greater than the liabilities and capital, which is the positive reserves and surplus. If assets is less than the liabilities and capital, which is the negative profits. That is the base point you should need to start. Only one thing will come, either profits or losses. From there, you should need to adjust items contributing the deficit or reducing the surplus. Which are reasons for losses? Are the situations which contributing for the losses? Operating losses, abnormal losses, declaration of the dividend and bonus shares, realization loss due to realization of assets during the process of liquidation. These all are items contributing the loss or deficit or reducing the surplus. In the same manner, you should also need to adjust items contributing the surplus or reducing the deficit, which may be the operating profit, which may be the abnormal profit, which may be the realization from assets. Then you will get list H, deficiency or net surplus as per list H, which should be equal to the deficit or surplus what you got in the statement of affairs. Now, if you observe in the last question, please consider, guys, all of you. In the last question, estimated deficiency as regard contributors, how much we got? 3,42,500. Actually, if you observe, I read the question up to some extent. Now the remaining extent, now I want to continue. Please consider, all of you. 3 years ago, exactly he go back to 3 years. The debit balance in the profit and loss account was given 77,925, which is the negative reserves and surplus, which is the starting point for statement of deficiency. And since that date, the accounts of the company have shown the following figures. Gross profit, certain expenses given. This is the total of expenses was also given. If you make it total, 4,500, 5,750, 8,000, also all these things, these are the total of expenses. Then can you please tell me the net profits, all of you? Net profits for each and every year? 65,000 minus total of expenses, 80,990. Here 15,990 loss, net loss. In second year, 45,000 minus 66, 245. Loss of 21,245. In the third year, loss of 40,000 minus gross profit minus all the expenses, guys, minus 63,340. 23,340. That means we started our journey with loss of 77,925. Now items contributing for the operating losses. These three, if you can add, these three, please all of you add 15,990 plus 21,245 plus 23,340. These all are items contributing for losses 60,575. Is there any dividend declaration was happened? Nothing was given. Is there any bonus shares were issued? Nothing was given. Now we need to check the realization losses case, all of you. Realization losses means how I need to check, sir. How I need to check the realization losses. Please concentrate. Goodwill in books, we have 1 lakh. How much you realized? 1,000. Loss how much? 99,000 loss is there. All of you please put in the calculator minus 99,000. Next. Building is there for 3 lakhs. We realized. But book value, we have 3,50,000. 50,000 loss minus 50,000. Plant book value 5,50,000. How much you realized? 5,25,000, which is profit actually, plus 25,000. Plus 25,000, not minus, plus 25,000. Next, after plant, just a second, please, sorry. Plant 5,50,000 book value. We realized at 5,25,000. Loss only. Sorry, I'm so sorry. Still loss only. I wrongly spelled it as a profit. Still loss only, 25,000. Next, after plant fixtures, if you check 23,000 is the book value. Fixtures realizable value is how much? 10,000. Loss of 13,000 minus 13,000. Next, guys, stock 38,000 is there. How much you realized for the stock? 31,000 only. Still 7,000 loss is there, minus 7,000. Next, debtors 25,000 is there. How much you got from the debtors? 20,000 only. How much loss is there? 5,000 loss is there, minus 5,000. So realization loss, I got 1,99,000. If I'm not wrong. If I'm not wrong, realization loss, I got 1,99,000. Not only this, guys, another loss is also there, which was loss for compensation. This 5,000 is also loss. Tell me, guys, 5,000 we are paying abnormal loss actually. That 5,000 is also loss, minus 5,000. Can you please make it total here? 77,925 plus 60,575 plus 1,99,000 plus 5,000. Total, I am getting 3,42,500. How much is the deficit as per statement of affairs? 3,42,500. Please check, guys. Previously, we got 3,42,500 deficit. Now, just now I work out which loss is the opening balance loss. This loss is the 3 years P&L losses. This 1,99,000 loss is the realization loss. This 5,000 is the death or disablement compensation. The total deficit was 3,42,500, which is as equal to the we already done with statement of affairs. Okay. So statement of affairs problems are a little bit lengthy, but nothing much concept involved here. While preparing statement of affairs, just to make it a present, list A, B, C, D, E, F, G. Then you know the deficit or surplus. If at all they ask you to prepare the statement of deficiency, then start with the opening balance of P&L, then add all current year profits or losses, or dividend distribution reduce, or bonus shares reduce, realization profits or losses you can also adjust. Then you will get the deficit or surplus what you get in the statement of affairs. That point just I want to emphasize here, guys. That's it, guys. With this actually liquidation of companies chapter is over. In hurry-burry, just I completed the statement of affairs and statement of deficiency, except this remaining all are in detail discussion. I made it. Okay. Sir, I'm running out of time. I know I am unable to revise the concepts, amalgamation, internal reconstruction, liquidation at this stage. Okay. But you can summarize such all things from your end, because so many times I already revised in the classroom. Whenever I'm entering into the class, the previous concepts also I'm revising it every time. Hope you enjoyed my sessions. Sir, one more time I'm repeating. Sir, if you have any doubt, regarding any concept, you can reach out me at CA Satyarazu 2016@gmail.com. You can reach out through this mail. Then I will definitely give a reply to you. The same classes, I think so, also available in your CA tube. If you have any doubt, you can watch such lectures as well. As I promise you, I will upload all the chapters, including the 3 chapters, amalgamation, liquidation, internal reconstruction. Okay. Bye-bye, guys. Thank you so much for your patience listening. Hope I satisfied within this limited time. Hope you are enjoyed my classes, and all the best for your future November 2022 examinations. Hope you will qualify with flying colors. All the best. Signing off. Bye-bye.